All right, welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go over some live mortgage rates, and then we're going to do a deep dive into blanket loans or portfolio loans, also known as. Give us just a minute here to go live on all the different platforms. Go ahead and drop a comment as you tune in. I see comments already coming in. Appreciate everybody tuning in nice and early. Happy Friday, everyone. About to get to a great topic here today and see what the rates are looking like. All right. Thank you for the comments. And it looks like we're live on all the different platforms, so we'll go ahead and get it started here. We'll take the chat off the screen for now, but keep dropping comments there in the chat. And you can also drop any questions that you have for us in the chat as we go through our deep dive topic for today. We'll go ahead and get it started. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and every weekday at 11 a.m. Eastern, what we do on this show is go through our actual live mortgage rates for the day, and then we do a deep dive into a different loan topic. Today's topic is going to be portfolio loans, also known as blanket loans, and we'll have our sales manager, Jose, with 28 years of experience, take us into a deep dive into that here shortly. But before that, we'll do what we do every morning, which is pull up the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and look at the actual rates this morning.
All right, let me change my screen and we will check it out. So as Kyle mentioned, this is our pricing tool where we will check the live rates and the APR for today. It is February 9th, just after 11 a.m. So most of our standard programs are live here. Has been a lot of volatility in the Treasury markets and the Fed announcements. So should see some interesting things here today. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with one of our team members. They can send you the full loan estimate. For the demo today, we'll set up a basic scenario so we can compare across the programs. $400,000 is the loan amount we'll use. We'll set the LTV to 80% loan, 20% down payment. And we'll have the computer find the lowest rates we can offer for conforming conventional. We'll compare that with FHA, which is usually the second option most borrowers look at. And then we'll go into our expanded guidelines, also known as non-QM. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. USDA is only for eligible properties. If you do happen to be looking in those areas, just let us know. We'll start with conforming conventional. We're going to do a purchase, 30-year fix for all the demos, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio of 40%. So with these settings, let's see if the rates have changed. Not much change, pretty much the same as yesterday, a little higher than it was last week. Hopefully we see the downward momentum pick back up later. Today, best option here, 6.375 rate for 2.375 discount points and cost. Puts the final APR at 6.659. So a good option here for our customers that need conventional. Still much lower than it was just a month or two ago. And if for any reason our customer doesn't qualify for conventional, the next option we want to compare is typically an FHA option. So we'll set up the same exact scenario. That way we can compare apples to apples here across the programs. The only thing we've changed is to FHA. And FHA does allow a little more leniency on credit issues as well as a higher debt to income ratio, but we'll keep everything the same here so we can compare. And today, the best option for FHA, 5.5 rate, 2.5 discount points and cost, puts the APR there at 6.441. So today, just a touch cheaper than conventional here for FHA, but you see they flip-flop every once in a while. So our customers that qualify for both, definitely don't overlook FHA. It could be a touch cheaper. This APR does include all of the upfront and yearly mortgage insurance. So this is the final cost to queue in on here. For our customers that need to use FHA programs to qualify, that's great because it's actually the same or comparable to conventional. And as I mentioned, the customers that qualify for both, definitely check them out. Now, where we love to specialize is if our customers unfortunately don't qualify for either version. Many other banks or lenders have to tell the customer no, but we love to say yes with our 5,000 additional options here under expanded guidelines, also known as non-QM. So we'll keep everything else the same, but now we have a new option pop up where we can change the income type we're using. So full doc is what we use for conventional and FHA. That means 2 years of tax returns. So if our customer doesn't qualify with 2 years of tax returns, we'll use one of these alternatives: asset-related programs, business bank statement programs. The investor programs are just for investments. We'll show that in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular. We also have RSU, stated income, BOE, 1099, P&L, no income, CDFI, all kinds of different variations here. So we will do the 12-month bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers are the ones that submit their tax returns and may have various write-offs where they don't qualify at all, or just maybe need a little bit of extra income to get the home they really want. Either way, we'll solve the problem. No tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio using the cash in the bank statements rather than the tax returns. So many times our self-employed borrowers qualify for much more income this way. So let's check out the bank statement options today. Wow. And they're still going down. So as I mentioned, it takes about a week for non-QM to start going down. Yesterday's show, they went down, and today they're down even a touch more here. So a couple options under 7, which is amazing. 6.75 rate for 2.35 discount points at cost. Puts the final APR at 7.145. So again, it's within half a point of conventional today, which is amazing for our borrowers that need to use bank statements to have almost identical pricing for a conventional versus using bank statements. So amazing options for our customers that need to use it. Please get with our team to find the best ones. There's hundreds of variations. If you scroll down here, some of these at higher rates and costs may allow bankruptcies, foreclosures, other things that would cause us to not qualify. And some of these may allow different ways to calculate the income. So tons of variations. Please get with our team to find the best one. And for our final demos, we always do live pricing for investment properties. So seasoned investors, first-time investors, we have great options. We'll set up the same demo here, $400,000 loan amount, 80% loan to value, 20% down payment. And we'll find the lowest rate options for conforming conventional for investment properties and compare that to our non-QM options for investments. Remember, FHA, VA, USDA, the government programs do not work for investment properties. So we'll start with conforming conventional here. Everything's going to stay identical as our other demos. The only thing we've changed is occupancy to investment. So let's check out the conventional rates today. And as has been the case for the last week, when we have volatility, sometimes our portfolio option pops up here. So that's not a Fannie or Freddie conventional, uses the same guidelines, but obviously it's a special program where we don't have the loan level price adjustments. So it ends up here at 6.875 rate for 3.25 discount points and costs, puts the final APR at 7.264. And our first true conventional option here is 6.99 rate for this option here for 3.375 discount points and costs, puts the final APR 7.396 for the true conventional option. So great options here for our customers that qualify full doc. But with these volatility that's been in the markets recently and the loan level price adjustments, always recommend our investors check out our non-QM investor options. So for the final demo, we want to do investment property, 80% loan. And this time we'll choose expanded guidelines, also known as non-QM. So we have a few new things pop up. First, the income verification. Most popular income verification type here is our DSCR because it doesn't require any income or employment or documentation on that from our borrowers. Simply use the estimated rental income on the appraisal to determine a DSCR value. The estimated rents can cover the expenses, aka the property cash flows monthly. That's a ratio of 1 or higher. We even have options for ratios under 1 where the property may not quite cash flow. For the demo, we always use 1.5 so we can see all the best options pop up. And finally, a prepayment penalty must be selected on a non-QM investment. 3 years is standard for these programs. That's what we use. There are options for no prepay. That does cost more and limit the programs that show up. There are also options for 5 years, which does save some money for our customers holding properties, but does limit the programs. 3 years is most common, so we can see all the most common options pop up here. So let's check out the DSCR options today. Wow. 2 options under 7 for DSCR, absolutely amazing. And they actually beat conventional. So best option here at the top, 6.75 rate for 3.275 discount points and costs. And for the second day in a row, true DSCR is beating conventional and portfolio full doc as well. Absolutely amazing. 7.242 APR here for a DSCR. So absolutely amazing. I would say 110% of investors will do a DSCR option because of the ease and flexibility. You can do 1, 2, 5, 10, 20 loans at a time and no income or employment documentation. And it's actually cheaper in this scenario, which is absolutely amazing. So definitely check out the DSCR options. And if we scroll down, there's many variations. Some of these may allow bankruptcies, foreclosures, other issues. Some of these may allow different ways to calculate the income. And some of these may allow us to do special property types, which is our topic for today. So let me switch my screen here. And today we're going to have Jose talk about our blanket or portfolio loans, which is typically an option using the DSCR qualification for multiple properties. So many times investors want to get multiple properties or a portfolio of multiple properties, maybe in the same city, maybe not even in the same city. A lot of times lower price properties together in a package. And it's a way to finance those all into one loan. But there are a lot of misconceptions here. It's not always the best tool for the job, but when it is the tool for the job, we have that tool available. So Jose, can you first explain a little bit more about when we would and would not use this program? And then let's check out some actual options.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So yes, let's get into what a blanket loan is and then some of the best uses for it and the not so good uses for it. To start, a blanket loan is also known as a portfolio loan, right? Not to be confused with portfolio when we're talking about a proprietary loan program for a particular conduit, like Nick was mentioning earlier, the portfolio program for investment properties that offers Fannie Mae type underwriting, but not Fannie Mae loan level pricing adjustments, right? That's not the portfolio that we refer to when we're referring to the blanket loan. We're talking about a portfolio of properties that are independently titled or folioed properties, right? So when, like in the example, for example, I'm going to give today, it's a portfolio of 3 units, meaning 3 separate individually titled and folioed properties. We're not talking about a 3-unit property, but we're talking about 3 individual units. So that's the first very important point there, because every now and then we do get somebody inquiring on a portfolio loan for an 8-unit property, because it's like, yeah, it's 8 units, yeah, but it's 8 units in one property, one folio number, one title, right? It has 8 units as opposed to 8 titles of individually titled and folio numbered units. The other point to consider is what are the best uses for a blanket loan, right? It's not necessarily going to be because you're going to save money due to an economy of scale, right? That's really not what's going to happen. You could have investors, for example, that may be tapped out on the number of individual loans that they could obtain, right? They've maxed out the conventional limit a long time ago when they could still do full doc, and now they've maxed out the non-QM limit, and they need something where they can have one loan for these multiple properties that they're buying. So portfolio loan would work for that borrower. Another more common and viable reason for the blanket loan is that you have lower valued properties that you may have an issue financing. So we have a couple of different portfolio options. The first option that I'm going to show, the one that goes to the maximum 80% LTV, is for a minimum property value of $100,000 on the value, and obviously 80% on the LTV. That's the maximum on the LTV, 80%, minimum on the property value, 100,000. Then we have a second example, which is the last one that I'm going to show you in my examples today, which is maximum 75% LTV, minimum 650 credit score. And that one is a no ratio DSCR, whereas the first one is a DSCR of at minimum 1.1 DSCR. So 80% or more, $100,000 in value per property minimum or more will get you 80% LTV. Minimum 650 credit score, no ratio DSCR will get you 75%, whereas the other one 1.1 on the DSCR. So that's so you could use that second example allows 75,000, around 70 to 75,000 minimum property amount, and minimum loan allocation per property of 50,000. So that one, theoretically, we could have two properties of $70,000 even, and put them into one portfolio loan of whatever 75% of that number is, which would be what, 200 times 0.75, or actually 150. We're talking a $112,500 loan to individual properties that you normally would not be able to finance individually because the loan amounts are just too small. Typically, in the DSCR world, we're looking at around, I think we have one conduit that'll let us go as low as $65,000 on a unit. But then you may have to couple that to see if there's any individual property value restrictions. So our first example here for our blanket loans, and these are all purchases I'm doing today. This is for our maximum credit tier of 760. So I have 760 plus, maximum LTV 80%, and 3-year prepay. You can price it with a 5-year prepay and get a little bit better pricing. So what I'm doing here in this example, so you can have an idea of how your loan is affected by different parameters. I'm keeping the sales price is 500,000. This is an extra scenario that I had. 3 properties, 141,000, 205,000, and 155,000. In this case, the borrower was one of those that has multiple properties and wants to try to figure out if this could be the best option for him. And one other thing I wanted to note, actually really important before I get into the rates on blanket loans, is that you have to be concerned about flexibility, making moves with the individual properties. Because remember, you're tying all the properties into one loan, one lien. That's why they call it a blanket loan. And in some cases, you're going to have restrictions on what you can do individually with those properties. So if, for example, you wanted to remove one of the properties from the loan, that's called carving out a property. So you would want to know what are the carve out restrictions, right? Really important question. Your borrower may not be aware of that, but you as a consultant are, obviously. So you would let them know what are the carve out restrictions when they are considering and contemplating the blanket loan, because that's probably the most important restriction. Now, they may not care if they're getting 10 properties of $65,000 or $70,000. It's the only way they're going to get it. They'll worry about carve out later. They'll just refinance all 10 of them if that's the deal, if that's what they have to do down the road. But normally we can carve them out. There's just some restrictions. So be aware of that and make sure you reach out to your consultant for those details, or make sure that you, the consultant, reaches out to your borrower and lets them know those details. So in this scenario here, 760 plus, 80% LTV. Very good option here. This is 1.25 points in loan discount for 8.565%. And this is the full price. There is not a additional broker fee. I priced everything into the rate. So this is total cost to the borrower for that rate, including any loan origination, 1.25%, which is not too shabby, right? That's pretty good deal there. Now, there are other options to buy down the rate. This is the lowest cost option. So the option I'm giving on every deal is the lowest cost option. And in this case now, same loan, right? That was 760. Now we're 740 to 759. Same income, because to get this scenario to price, I actually have to input the income per property, the taxes per property, the insurance per property, and the system calculates the DSCR, make sure that I'm at 1.1 or above, and doesn't give me a rate option that would put me above below, should I say, 1.1 in debt service coverage ratio. So here, 740 to 759, my lowest rate option. A little bit higher now in the cost, actually, is all that happened here. 8.532. The other option I had 8.565, pretty much the same, just half a point lower cost. So costs you half a point higher to drop to 740 to 759. Still can do 80% LTV. Now my next option, still amazingly 80% LTV on the blanket loan, right? Same income, same everything. Now we're at 720 to 739 credit score, and my rate pretty much the same. Now we're 8.59. So yes, 8.59, more or less the same rate, but we are at 2% loan discount, right? So not too shabby here. I mean, anytime you can see 80% on a DSCR at these rates and for a blanket loan with a 1.1 DSCR, that's amazing. 8.59 for 80%. Still, that's the key number there, 80%. Now we go to 700, and here's where we start seeing some changes, right? Same purchase price, our loan amount now drops to 375, so our down payment now is 25,000 more. And we are at 700 with the 3-year prepay. Still good rate, 8.64. Now our cost drops back down to 1.25 because we are at 75% LTV instead of 80. And what I see myself out there in the world of blanket loans is that the majority of the options are at 70% and 75%. Us being able to get 80% is a rarity. So right now we are at where everybody else is, and we're with a 700 credit score, which is not bad. And we are at an 8.64, which is amazing, with only 1.25 points loan discount all in on this deal. Very good deal right there. But wait, there is more, right? So now we have 680 to 699. This is really the cutoff for these good rates, 680. Below 680, we go to our other option. But you noted, still amazing rate. And you'll know what I mean by amazing rate, because this is 8.69 with 2 points, right? All in right there. So now our last option is for our minimum credit score borrower, 650 credit score. Now, the options I just showed you at 680 and above credit, that option does allow us for carve-outs. There are some restrictions. It does allow us for carve-outs. Now, this option does not allow us for carve-outs. And it tends to be because they allow you to put smaller loans in there. You're going to have more individual loans. So they're already taking more risk. So they want to ensure the value of the portfolio is maintained. So they don't want you to take any properties out of there. But again, 75% LTV, minimum credit score 650. We do get some exceptions below 650. And this one, I priced it out with a 5-year prepay. And again, here we go. So here we're looking at 1.75 points all in and 11.69. So you do see the rate goes up a bit, but again, we're looking at a no ratio DSCR, right? They don't calculate the debt service coverage ratio at this loan amount in this conduit. I believe if we go over $500,000 loan amount, they do start calculating the debt service coverage ratio, but at $500,000 and below, it's a no ratio DSCR at a 650 credit score. So this is a very good deal, 11.69% lowest cost option. All of these options that I gave today were the lowest cost options. So definitely looking forward to assisting you all with these blanket loans, whether you're a member of our team or whether you are out there a consumer looking for your blanket loan, contemplating if it's the right thing for you. Reach out to our team of experienced loan consultants, because of the mortgage calculator, we're experiencing all of these outside the box matters. So if you want someone that's going to really provide solutions, not someone that's going to tell you what you can't do, but someone to provide you multiple solutions to help you meet your objective, and you will just pick the best one. Not the only one, but the best one. So definitely looking forward to assisting you with any of these needs.
We had one question on Instagram, Jose. Does this work on single tenant, triple net leases?
Single tenant, well,
Like, I'm guessing a property manager, maybe doing short-term rentals. It sounds like some kind of property management master lease, I'm guessing.
It depends. If it's something like that, yeah. But if it's a true commercial property, that would be what we would normally find on a single tenant, triple net lease, like a CVS or a Walgreens or a dollar store or Starbucks, any of those. No, unfortunately, those would not qualify for one of these loans. This is for 1 to 4 unit residential properties. Usually, if we deviate from 1 to 4 units and go to a 5 to 8 unit, we'd have to get exceptions. I'm not saying we don't have those, because we have true commercial conduits for this program as well. So we could probably custom tailor a deal like that for the right investor with experience, because at that point they're going to require investor experience. But again, not for the true commercial property. But again, reach out to us if you do have multiple single tenant, triple net properties, and we could probably put something together for you. But it has to be more than one, right? It can't be one property with 10 units, but it could be 10 individual units. We could do those.
And if he's referring to a master lease of one lease for multiple units, like a property manager, that is not typical, right? So that would be some sort of case-by-case exception. I've heard of those where they're like in college, room renting by the room. It might be a true 4-unit property, but maybe they're renting 8 rooms individually with 8 leases to some sort of management company. That becomes very, very tricky. So I don't think that would typically fall in the regular guidelines here of these programs, right, Jose? We would have to.
No, we would have to get some type of an exception, and most likely they will price them out as long-term rentals if it's something like that, because they're going to have to price it usually according to the guidelines. The exception there that would have to be made is that they don't have long-term leases in place. They would have to have, for the first option that we showed there, they would have to have some type of lease in place. The second option would not have to have leases, but they are going to document the use of the property. And that's where the exception would be needed, because those are considered like a boarding house, basically.
So hopefully that helps answer your question there on Instagram there. That was it for questions.
Yeah, I don't see any other ones, so I think we can wrap it up. But great program there. As Jose said, definitely always a great tool for low property values too. We've definitely used that successfully a lot for that reason. So appreciate everybody tuning in. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we'll be back next week with some new topics. Thank you, everybody, for tuning in. We'll see you on Monday, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great weekend, everyone.
Thanks, everybody.